Good evening everyone. So in this video, we will be discussing receivables financing. So let's start with accounts receivable financing. So what are the ways or the different ways to finance accounts receivable? So what does this mean? So sometimes companies will have less cash or don't have the cash to pay maturing obligations. So sometimes they have to acquire financing. So you can do that with accounts receivable by using it as a collateral. So that this is called a pledge. So you use the accounts receivable balance as collateral to get a bank loan. You can also use it as an in an assignment contract. So what's an assignment? It's similar to a pledge, but it applies to specific accounts only. You can also sell your receivables. So this is called factoring. So when an entity sells its receivables to a factor, which is usually a bank, it's called factoring. So it is different from a pledge or assignment since there is an actual transfer of ownership to the factor. In this video, we will be discussing or we will be doing some examples up on assignments. So accounting for pledges is the easiest. So since you only need to disclose the amount of the accounts receivable that you have pledged to the bank. Assignments, on the other hand, you have to account for in your books. So generally, there are two types of assignment depending on whether you have notified or the customers are notified that their accounts have been assigned or not. So if they are notified and instructed to pay the bank directly, it's called a notification basis. So assignment on notification basis. So accounting for assignments in this form is easy because you have to just reclassify the assigned accounts to a separate account called accounts receivable assigned. You don't have to enter any entry for collections, sales returns, and sales discounts since the bank will do those for you, or the bank will collect the money or uh, do the sales returns and sales discount for you. On the other hand, when customers are not notified and they continue to pay the entity, this is called an assignment on a non-notification basis. So in this form, the entity remits any collection to the bank as payment for the loan. Similar to the assignments on notification basis, you have to reclassify accounts receivable assigned to a separate accounts. It's called accounts receivable assigned. In this form, you have to enter or you have to record collection, sales returns, sales discounts normally. As a disclosure requirement, you have to disclose in your audited FS that the equity in your assigned accounts. So let's have an example. So let's do problem 8-3. So on May 1, Elegant Company assigned 800,000 of accounts receivable to a bank in consideration for a loan. The bank advances 80% less service charge of 20,000 and charges an interest of 2% per month, and the assignor continues to make collection. So the assignor, which is Elegant Company, continues to make collection. So this is an example of an assignment on a non-notification basis. On May 5, Elegant Company issued a credit memo to a customer for returned merchandise 30,000 pesos. The account is one of the assigned accounts. On May 10, Elegant Company collected 500,000 of the assigned accounts, less 2% discount. On June 1, Elegant Company remitted collections to the bank plus 2% for 1 month. On June 7, assigned accounts of 10,000 proved to be worthless. On 20th of June, Elegant Company collected 200,000 of the assigned accounts. And finally, on July 1, a final settlement was made with the bank. So, Elegant Company accordingly remitted the total amount due to the bank to pay off the loan plus interest charge. So what are the entries in an assignment on a non-notification basis? So May 1, you reclassify accounts receivable to accounts receivable assigned 800,000. You receive cash from the bank of 620,000. So this is computed with a 640,000 because you have 75%. Let's go back. So since it's a cash advance of 80% less service charge of 20,000, so that is 80% of 800,000, that's 640,000 less 20,000. So that's why you only get 620,000. Service charge of 20,000 and notes payable of 640,000. So debit service charge 20, notes payable 640. Sales return of 30,000 on May 5. So normal transaction. May 10, you collected 500,000 of your accounts, less 10,000 discount. So 2% discount. So you only received 490,000 in cash. You remit the same on June 1. So you pay 502,800, including interest expense of 12,800. That's it. That is 2% per month. So you received 640,000 times 2%. That's why it's 12,800. And then of course 490,000 notes payable is debited. On June 7, you wrote off 10,000 accounts, 10,000 worth of accounts since it's worthless. On June 20, again you collected 200,000, and on July 1, you made a final settlement of 153,000, including 3,000 of interest expense. So 3,000 because you've already paid 490,000 out of the 640,000 payable. So 640 minus 490, that's 150,000 remaining, times 2%, that's 3,000 interest. And you close notes payable 150,000, so that's why you only need to remit 153,000 pesos. So here's the proof of our final settlement. So you collected 690,000 less discount of 10,000, a return of 30,000, and accounts written off of 10,000. So total credits of 740,000. You have 800,000 in total assigned accounts. So there are 60,000 that you have to reassign to accounts receivable. Now what if it's on notification basis? So let's do problem 8-4. So here, docile company assigned AR to a bank for a loan on the following basis: 75% cash advance, 4% service charge on gross accounts assigned, 2% monthly interest, and the bank makes the collection. So Since the bank makes the collections, this is a notification basis assignment. The entity signed a promissory note. So on July 1, the company received remittance from the specific assignment of 1.5 million in accounts to the bank. So 1.5, it means 1.5 million of your accounts receivable has been assigned. So what you actually receive is just 1.5 million times 75% advance minus 4% service charge. On August 1, the bank notified the docile company that 800,000 of the assigned accounts were collected. A check was sent to the bank for 1 month interest charge. On September 1, the bank notified the docile company that assigned accounts of 500,000 were collected in full and the remaining accounts of 200,000 were being returned. A check was received from the bank in settlement of the assigned contract. In making the settlement, the bank deducted the interest charge for the corresponding period. So what are the entries? On July 1, as said earlier, you only collected 75% of the 1.5 million, or the bank only remits 75% of the 1.5 million less the 4% service charge. So 4% service charge was based on the gross amount of 1.5 million. So that's 60,000. So deduct it from 75% of 1.5, which is 1125. So you actually only receive 1,665,000. Sorry, 1,065,000. Assigned accounts are 1.5 M are reclassified to accounts receivable assigned. On August 1, the bank collected 800,000 of assigned accounts. So it's deducted from your notes payable. You don't record any collection since the bank did it for you. You record, however, the payment of interest amounting to 22,500. So that's 1.5 million times the interest rate of, or rather, 1125 rather 1125 times 2% monthly interest. So that's 22,500. On September 1, you collected 500,000, or the bank collected 500,000 of the assigned accounts and remitted the same to you. So interest expense of 6,500 is based on the outstanding notes of 325,000. So 325 times 2%, so that is 6,500. You close the notes payable remaining balance of 325,000. So that means you'll be getting 168,500 from the bank. And of course, you close the accounts receivable assigned of 200,000 back to accounts receivable. So that's it for assignment. So next video we will be talking about factoring.